Welcome to our weekly Forex forecast. My name is Jay Norris. I teach trading at Trading University. As always, we need to remind you that trading involves risk of loss and is not suitable for all investors. The charts you're going to see are real-time market snapshots and may not be replicated going forward. First market we're covering is the Aussie US dollar. Nothing's really changed for us in the Aussie USD. You can see it continued to find resistance against the January highs. That line also happens to be a 382 retracement of this move. So you had that downstroke and then a 382 retracement. That's definitely a sign of weakness when a market can't even retrace beyond 382. I had a purple line there. That would have been a 50% retracement. You couldn't even get to that. This week you shifted the short-term pattern, that 5-day pattern, lower. If you take out that support right there, you can see I've marked the low of the highest closing candle on this daily chart. Here's your highest closing candle right there. That low has been holding as support. If you close below that low, there's really no place for this market to go but down. Essentially, if China doesn't continue to improve, you're going to see lower prices in the Australian dollar here. The Aussie dollar, definitely a proxy for the Chinese economy. So if things start to go south in China, you'd look for the Aussie to do the same. Next market, the dollar chief, dollar Swiss. No doubt about it, this is a bearish picture. Market's very weak. I was looking at the weekly chart, and I think this is a historic low weekly close today. I mean, you have to go all the way back to 2011. Yeah, I mean this is definitely a historic low close here. Definitely a weak market. On the other hand, you're sitting on top of support. So historically, that's a tough row to hoe for a professional trader. You see that yellow line? That's what we call a Gann 1/8 line. Under Gann, who's a famous market tactician many years ago, 1/8 happens to be a pretty low risk place to be long a market. According to Gann, it's the lowest risk place on the chart you'd want to get long from. A lot of old timers aren't crazy about selling into that 1/8 level. Longer term, you see that gold line, that happens to be a long-term 382 on the weekly chart. So bottom line is this is a market that continues to find support at this level. So, it's going to be a tough nut to crack as far as short term. Now, short term, we've been on the sell side intraday, and kind of surprised you didn't see some more downside. But then again, not so surprising given you have all kinds of support down here. Here, let's take a look at our RTT ratio. And this is kind of the brains behind the operation. Here's our Swissy. Now, this is pretty bearish development. Look at all these short-term patterns on up to the long-term patterns are all bearish. On the other hand, that long-term primary is bullish, and you're sitting on top of long-term support. So, historically, and I know from experience that if you have all these patterns aligned lower, but you're not making steady gains on the downside, then that not necessarily may be a market that you want to be short in, especially when your longest term pattern here still happens to be bullish. So, like working the Aussie from the short side, not really willing to commit to the downside longer term, not willing to commit to bearish overall positions. Next market we'll take a look at will be the dollar index. The dollar index is a funny chart because they still can't take out that 80 level with any kind of conviction. So 80's holding. You got good support there. We have a RTT level. You got a Gann 625 level. It's kind of interesting that this on par, if I'm just looking at one time frame, right? I'm just looking at this daily chart. I'm trading the daily chart only. This is a bullish development that this level is holding. So yeah, I know when we look at our RTT ratios, the short-term traders, that's significant that 5 to 25-day pattern are down in the dollar index. And we know it as short-term traders, we're selling rallies here. On the other hand, that's significant that old 50-day pattern is bullish. And I know from experience, and we know historically, that 50-day pattern is a tough one. So, you can't get bearish about the dollar here. So even though you have so many of these markets, the dollar pairs, you're looking at the Swissy here and the dollar index there. The majority of pairs are down, but it's tough going trying to go after the short side just yet. Next market will be the euro. Now the euro, without a doubt, it's bullish here. If I go back to the brains behind the operation here, our RTT ratio, you definitely have some bullish patterns there. no doubt about it. We've been working the long side intraday. Even today, there was some good action on the upside in the euro. On the other hand, you're coming up on historic resistance just above. You definitely have resistance when you get to that 38 handle, the 38 figure. And, my guess is the resistance just keeps getting tougher the higher you go. Wouldn't mind, however, seeing a blow-off rally just to knock stops off above that isolated high, the December high, but we'll see what they get. So, short term, we have to focus on our ratio, what that tells us to do. We always just focus on what the patterns tell us to do because we understand that those patterns are a better reflection of the underlying fundamentals in a market than you're going to see in newspapers or generally with your own analysis, right? I trust the pattern on the chart as a reflection of fundamentals more so than anything I can read about a market. So that's why we focus on it. So for now, as shorter term traders, we're buying dips in the euro. As longer term traders, we're very aware that you're coming up on long term resistance. So we're not keen about committing to longer term long positions. We'd rather just hold short term long positions. Last market we'll cover in the Forex will be the dollar yen. I'd really feel comfortable with a double bottom. I'd like to see dollar yen come and test 101 one more time. See that purple line? That's a 50% retracement from here down. Basically, we think this downstroke here is in the process of just balancing itself out. Generally, you get a pretty sharp reaction lower, and it's going to balance itself out by retracing 50%. It did that. It retraced 50%. It got to that same level 3 times. It continues to hold. So we'd like to see a double bottom. You're kind of in no man's land here when we look to our RTT ratio, no doubt about it, your majority of patterns are bullish here, and you'd want to be buying dips overall. So let's wait and hold off and see if we get the big dip back down to 101. I like long dollar yen. I like buying dips here. I'd just like to buy a big one. Wouldn't that be something if you get a shot at 101 in dollar yen? Thanks again. Always good to see you. My name is Jay Norris, and we look forward to seeing you next time.